All right, in today's video, I'm going to touch on the elephant in the proverbial 2020 housing room. Are we headed for one of the biggest crashes in the last 15 years? Okay, the game plan for this video is the first thing I'm going to do is I want to talk about the housing indicators as they relate to a potential crash, specifically around short sales and foreclosures. Secondly, this is going to include 5 of the main hot button issues that people are inquiring about related to this issue. The third thing is that in the overall way we're going to put this video out is on a new format that I really think is going to add you guys a lot of value, so I hope you enjoy that. And lastly, to finish off, I'm going to give my personal thoughts on how this current possible issue relates to our last crash. Okay. All right, guys, so we are obviously trying a new format here. I'm going to introduce our guest here in a second, but we are workshopping the podcast. So what this is going to allow us to do, we're introducing this just to get more creative with the format of the way we roll out some topics, to give more subject matter expertise and interview with more interesting people, maybe get a little bit out of the state of Florida as a whole as well. So we're going to do that, playing with the name. So if you tell me if it's too douchey, but that's the starter name, so we can always evolve that. But so I want to introduce Troy Funk here. So Troy Funk is going to be really what brings this video kind of full bore with complete subject matter expertise. So I'll give a little bit of Troy's background and then we'll let him speak for a minute. But so Troy Funk is the broker here at our Sarasota office. So we're in downtown Sarasota. So been in real estate forever. So 35 years, 2 decades of that being really, really heavily in the bank-owned properties, including multiple years of 100+ sales in a single year, which anyone that's in real estate knows that's incredible volume. But consistently an REO kind of subject matter expert, so kind of an old dog of real estate. And as we're emerging into this kind of year, which is very unique, history matters a lot to me as far as something you can't replicate if you've never gone through it. So without further ado, Troy Funk, I will put him on the spot for just a second to introduce himself, and then we'll hop into the interview.
Thank you, Adam. Boy, that's a great intro. Yes, I've seen so many cycles. I've been in business, as you said, 35 years, and I've seen a lot of cycles in this industry where foreclosures are the market. That is the bulk of the market of what's selling. And we're in a really unique space right now because our market has never been as strong as it is right now from a seller. We are in a strong seller's market where inventory is less than a month away. But people say, what about this big bubble that's going to happen? We know this is not sustainable. What's happening next? So when I look back at the history of what's happened in Sarasota in our market, I can see some patterns, and I guess that's what I want to share with you today.
Great. So as I mentioned in the intro, this has been just incredibly a credible kind of like amount of questions I've received about this. And, a lot of it, I'm going to talk about a little bit at the end relating to kind of like what happened 15 years ago and like how similar is it there, and this whole bubble idea related to appreciation and all this kind of stuff. But for this topic, I think the most poignant thing that's going to happen here, in my opinion, it feels like a short sale thing, and a foreclosure thing. So I think people are wondering what happened with that, and people like Troy, it feels like are really kind of like feeling patterns that happened several decades ago, or any sort of history, right? And then newer people, even like as new as me, like may not have a history to kind of give that context. So I thought it'd be more valuable to the audience to bring in Troy. We're going to riff a little bit. We have like 5 main points that kind of like surround a lot of the hot button issues at the moment. So we're going to jump in with that, and I hope you guys find it useful. And are you ready?
Let's go.
So the first thing I wanted to talk about was the kind of the moratorium on foreclosures. So foreclosures and forbearances eventually being lifted, and I'm sure a lot of people have heard about the delays and investors can't kick people out and all this kind of stuff.
Right.
So what do you think the impact this could have on the real estate market as we go forward?
Well, it's interesting. Right now we are having foreclosures in Sarasota County. We're having about 1 a day. You can check the clerk of courts. So there are foreclosures that are still happening, even in the hottest market that we have. And in fact, we're marketing a couple properties right now that are bank owned. But it's gonna change because the moratorium is lifting, and it's giving the banks the freedom to just go full force in cleaning up the inventory. But when we look at what's actually in litigation right now. Like in Sarasota County, there's about 600 properties that are in list pendant status, which means those properties are facing foreclosure. So those would hit the market. But when you look at the absorption rate of how quickly homes are selling and the time period it take to take those, I don't see that having a real negative impact on us as much as a lot of people may fear.
Okay. So do you think, so what a lot of people ask me is, we know the seller side, or the owner side,
right.
But do you think this all of a sudden creates an eventual opportunity for like the everyman or novice investor to jump in for purchase opportunity? Or do you think this is all going to happen kind of to the crowd that hears about it first, and it's going to be too competitive for like a normal person to get an opportunity from a resale that's a short sale?
Well, there's always opportunities. It doesn't have to be a short sale or a foreclosure. And a lot of people think that you have to buy a foreclosure to find a smoking deal, and that's not always the case. It always surprises me when we do have a phenomenal opportunity that most people don't see it. Yeah. That is the biggest misnomer to me, is sometimes we get a great opportunity and the buyer just doesn't see it because they're so focused on the condition and they're not doing the math right. They're not realizing that property will be worth this once this is put into it, and that they're buying into equity, but they're going to have to earn it.
Yeah, I think that's a great point. Yeah, so I talk about this a lot, about being not romantic about it, and like I'm a amateur economist, and that's all I care about really. So I think these are some of what I saw was it has a lot of the kind of old school real estate rules that surround the same with kind of going new construction versus being closer to the beach and all this kind of stuff. So I think there's a lot of similarities with that, and so we're trying to give enough context so people maybe can see some of this stuff coming, just like a new phase at a builder that 6 months in advance it's happening.
Right.
So, okay, so next kind of area, if a property owner was facing a foreclosure and wants to keep the home, are there a myriad of options for that kind of thing, or is that kind of like bank takes it no matter what?
Yeah, excellent question, because that's the first thing you have to think about is when you have a property in foreclosure, do you want to keep it or not keep it? Because that's going to take you down two separate paths. So let's talk about the path, I want to keep the property. Now the first process is normally forbearance, and that's what we're seeing right now is a lot of people are in forbearance. They're not able to make their payments. Forbearance does not stop foreclosure, it's a Band-Aid until something else works out. After forbearance, the next probability is loan modification. If the lender approaches you with a modification, and that's what's happening right now. They're looking at a lot of these forbearances, this big glut of property that could go back in the market, having those mortgages modified. So instead of a 30-year mortgage, they're looking to modify those into a 40-year mortgage. So their payment would actually go down, even though could go down, even though they've missed payments for a year, but it still keeps that homeowner in the property. The challenge, though, is the owner has to qualify in most cases. So if they don't qualify for a modification, that means they're in trouble. They're going to potentially lose the house. The other options, of course, would be bankruptcy. If you can refinance the property, it's going to be hard to refinance if there's credit problems. That means you're going to need to take somebody else, a family member, willing to co-sign on that loan, or some kind of other variable is going to have to take place to do that. But if you're not going to qualify for the loan modification, to be blunt, you're in trouble.
So how would you compare a loan modification? Because the way you're describing it, I'm sure a lot of people say, like, if you refinanced if you had less years to pay and you refinance to take advantage of that equity, they would compare that, maybe the way you laid it out, very similar to how a loan modification adds years basically to lower payment. How would you compare the two? Like as far as qualification and terms, as far as if you went to 40 years versus 30, or you refinanced when you already had an advantage and pulled that money out as a short-term play, but now you're at a longer term?
Yes, and again, that's how you all look at it, because you may have been in that house for the last 7 years, now you have 23 years left on the mortgage, and to modify it into a 40, even though your payments go down, look like, well, I'll never pay my house off. This doesn't feel good.
Okay.
But it's that, or the bank has a right to start foreclosing.
So yeah.
So it's not less of the two evils, so to speak.
So with that being said, if the owner just wanted to get out,
Right.
And they were saying that none of that sounds attractive, or I want to cut trial, figure it out later. Where do you see that going?
Well, I was in that position. I had 18 properties, and when the market went negative on me, I mean, I literally went from having millions of dollars in assets to being negative, to where the real estate was worth less than all my debt. So when you own a house that has, say, $200,000 in negative debt and the tenant's not paying you rent, I don't want to own that house anymore. It's not that I don't want to own the house. I don't want to own that debt anymore. That's an obligation. Or there's a lot of situations people have homes, they just don't want them, but there's a mortgage attached to it. You can't just sell it if it's negative. If the mortgage is more than what the house is worth, it's not. There's a process. So let's just talk about I don't want to own this property. Number one, if you do nothing, means the bank forecloses. That is the worst possibility for everything, because number one, foreclosure is not going to stop the frustration with it, because even after foreclosure, the bank can file a deficiency judgment and keep coming after you until they collect. So doing nothing is the worst thing. The second thing is a deed in lieu of foreclosure, and that's where you deed the property to the bank. Now the bank has to be willing to do that. In most cases they won't, because a deed in lieu of foreclosure does not clear title. If there's a second mortgage or there's other HOA fees, the bank is assuming that. It's easier for them to foreclose, get clear title, and then resell the property than take a property back that could have some title defects. Yeah. So it doesn't mean that a deed in lieu of foreclosure, even though the seller wants to do the deed in lieu, that the bank is willing to. And what I typically see is when the bank is willing to do a deed in lieu of foreclosure, they want a deficiency attached to it. Well, what's the point? I mean, if you're going to give your house away and they're still going to come after you, that makes no sense. So the obvious solution is definitely a short sale.
Okay.
That's the right answer. If you don't want the house, you should do a short sale.
Okay. And I want to get into that for sure. And we can kind of circle back on that one. So real quick, you mentioned that I think would be interesting to people, the 18 houses owned thing feels a lot like the people with fragile ecosystems of the last crash.
Right.
So I know there's different relating to finance and that kind of thing, but where do you see, I'm going to touch on this later too, but where do you see comparables in what you just described that would be similar to what's happening coming down the pipe, if any?
Well, I remember the crash right before
Talking
the crash.
About 2007.
I was in. Especially when you're holding on to all this real estate.
I was in college.
Well, no, I had all this real estate, and obviously I could see the value going up very, very quickly, and excited about that. And rents were going up very quickly, and people were buying. But the adage at that point that anyone that they called them the ninja loans, no income, no job. It was basically they were liar loans. You could go to the lender and you could lie about your income and lie about everything, and you got approved. In fact, I remember one scenario where I refinanced a property, and I talked to my lender over the phone. I signed all the loan paperwork at the closing table. I mean, they were doing them that quick, and I mean, it was a mess. I mean, just anyone that could finance a property was able to in that marketplace. That has not been the case for the past decade. It's been very difficult to get financing, and in our area, I think what are the numbers? What are they, like 50% are cash?
Yeah, it's about 50-50 everywhere I've ever looked. And then mine's like probably 85%.
That's why I said I know yours is probably 95.
But which hides a lot of issues, but just not as relevant issues related to interest rates, and all that kind of stuff. But our area is not a normal market in that respect. I don't think.
What's interesting, one community in our area, University Park in Sarasota, they won't allow a buyer to buy in there with a mortgage. You cannot buy a property with a mortgage. So needless to say, they've never had a foreclosure in that community, which is kind of interesting. So
do you that is interesting. Do you think, because I know sellers will choose not to allow certain type of financing when they sell for their own needs. Do you see more like association-based neighborhoods and master plan going to stuff like that to prevent like long-term foreclosures, like of not allowing mortgages?
That's not been as common. I mean, that's the first time that I heard of that, because I never thought of the fact that community never had a foreclosure that I'm aware of. But that was in their deed restrictions, that you could not secure financing to be approved.
That's interesting. Yeah, because you see like the neighborhoods where Like they're like having board meetings for years,
Mm-hmm.
drawing out these foreclosures that they couldn't get people out of.
Well, the foreclosures hurt a lot of people.
Yeah.
Hurt the neighbors, so of course that's a concern. But so going back on the target with what that looked like back then, it wasn't really a housing bubble, it was a finance bubble. The finance bubble just burst. You can only keep loaning money out to people that can't qualify for so long until it stops. Well, that's not where we're at right now with this situation. I mean, we are in a place of great demand, a lot of desirability. There's so many people coming to Florida, and they're literally evacuating the state that they're at. I mean, they're trying to leave as quick as they can. So we're seeing a huge impact, but we're hearing that all over the country, though. Even in markets that would seem to be depressed, the real estate market is very healthy, and that's because the interest rates are so low. And it's still, in some cases, it makes sense, even in a market that's not doing well, to own versus rent. So the interest rate has a huge impact.
Yeah.
I mean, where we are on interest rates is certainly a drive of the market. The other thing that's driving our market is the fact that our country literally was put on hold for 4 or 5 months. And just like anything, I mean, if the store was closed for 5 months, the lumber store was closed for 5 months, and now, okay, let's open it back up. Well, of course, lumber's going to go sky high, which is what happened. And it's the demand. People are trying to catch up with that void that we saw.
Yeah, agreed. So I want to end on, so the fifth thing we want to touch on is short sales.
Right.
So you mentioned a lot about the foreclosures and what the option of how attractive a short sale may be at certain scenarios. Can you kind of run through your thoughts on that in general and detail of any level?
Well, personally, I short sold most of my properties out. I got out as quick as I could, because once the property started becoming negative.
And just for complete novice,
right?
What major differences? Short sale, foreclosure, just what would be attractive about it, just if you didn't know anything?
Yeah. Best thing is, just like if you got hurt in an auto accident or any kind of accident, if you got hurt, the most important thing is recovery. How do I recover as quick as possible? I mean, and that's what a short sale will do. It will financially give you the best chance to recover as soon as possible, because my goal was to get out of negative debt and to buy another property again, which is what I did. So with a short sale, you can be back in the marketplace as a homeowner within 2 years. That's huge. Where the foreclosure,
I think a lot of people, if you asked them, I think they would think along the bankruptcy type of terms of 6 or 7 if they didn't know better. Just a layman of thinking that 2 year thing's interesting, I think, if you weren't familiar.
I wasn't willing to file bankruptcy.
Yeah.
I mean, I had businesses and things, and I really just
2 years
wanted,
isn't bad.
Yeah, no, 2 years on short sale, and it canceled out the negative debt. A lot of people don't realize that just like as a foreclosure or a short sale, you're going to get taxed on that loss. Yeah. And you think, well, that comes the fear factor. Like, I don't want to foreclose because the IRS will then come after me. Well, they may not, because here's the situation with a short sale. You are insolvent. To get a short sale approved by the bank, you have to be insolvent. So when your assets are less than your liabilities, you're insolvent. Well, on your tax return, you basically file insolvency. So you don't declare to the world that you're bankrupt, but you demonstrate to the IRS that you're insolvent, and that cancels that out. Now, there's no way I would ever do that on my own. I mean, you have to have a qualified CPA do your taxes in that regard, but that makes that canceled debt disappear because you are insolvent to the IRS. You've canceled out that debt with the bank. You're able to financially recover in a couple years, and then if all else goes well, and then get back in the marketplace.
Yeah, that's interesting. Yeah, so I mean, I think all that's super interesting. So the idea here, guys, was basically like, obviously I think the timing of this kind of video, we're getting to like the tipping point of where I feel like people's patience and they're just growing weary of like trying to figure this stuff out. And then now there's certain cases where you, like I mentioned, if you haven't seen the video about should I buy now, check that out. Last week, I think we posted it. But people are kind of coming to the brink of like, well, it made sense 4 months ago. I've been sitting on a wait list, or I couldn't find a resale, and now it no longer does. And then a lot of folks, and the other side of that is what's hidden. Like, what's the short sale? What's the foreclosure? A lot of people are asking that. They're feeling it. They're thinking they can wait because this is coming. So I just want people to have all the information, right? Like, just like we know, if you ask me right now, like in the next 18 months, we don't know what resales are going to be put out from sellers that aren't now, but we do know what's going to be built. We know what neighborhoods already exist. We kind of know the whole entire landscape, right? Mm-hmm. So like, to me, it's saying that the major difference in this is that it feels like there's momentum. Of all the short sale people, it feels like there's momentum, right? And the short sale is not something that you can just give a wild opinion on, right? That's why Troy is here. It's not something that, that I think like I said, the history matters, right? But this market isn't just fully contingent on interest rates, especially in the Southwest Florida, right? Like, you're looking at a lot of times like of a cash buyer, right? They're not going to go underwater, technically. Like, there's not any recourse that the bank can have because the bank's not involved, right? So as long as they can pay it, and as long as it's cheaper than they're paying elsewhere, they just want to live here, it doesn't matter. So when you're like, I'm not paying $900 for that, and they're like, I would happily pay $900 for that, that's why. So I think there's some differences, but there's also a lot of similarities to a crowd of people, and I think a lot of the hidden crowd might be potentially a bigger crowd than the relocation crowd. So I don't know if that equips you with information to wait 2 years and say that I'm going to be here when the short sales hit, right? Because I don't think that's going to be the funnest shopping market for a regular buyer. But I do think you need that information if you're shopping in the market, because that's another data point that I would have liked to know if I'm going to force something now in a different scenario. So anyway, so that's the purpose of this. I hope you guys like the format. Thank you, Troy, for joining.
Thank you.
Please, if you guys, we opened a can of worms probably. So this is 5 areas, right? But there's a lot here, and there's I want to know more information, or people are getting mad at me for saying this, but we're in trouble with our mortgage and I haven't told my wife, or I haven't told my husband, and you just want to know more information, right? So again, being in the right hands probably matters a lot with this, because a lot of people could save their house if they ask the right questions at the right time, but time really, really matters. So I want to open this up. If you have additional questions, if you want more information on the topic, not even one-on-one, but evergreen, ask questions in the comments. Please DM us, email me directly. We can do more. We can do Q&As, we can do lives, we can do more video content on short sales if you guys are seeking that information. So I'm going to open that up. Anything else?
No, Adam. Thank you for
Sweet.
your service.
Well, thank you guys. Appreciate it, and we'll wrap here. You good?
Yeah, is that all right? Adam, what do you think?
It's awesome.
Okay. Yeah, just off the cuff.
Yeah, no, that's perfect.
Good. I mean, your energy.
Okay, that does it for this video. Thank you so much for watching. Please make sure you subscribe. Please leave your questions in the comments below. We're going to answer those live on video. Please reach out to us if you need anything at all in the future. Thanks again. We'll see you soon.